Then I would like to ask forward Robert Jarvis of Luxembourg for Finance, who will be discussing Brexit with us, another hot topic.
Thank you very much, Michael. So unfortunately, my speech might not be that entertaining, but perhaps a bit more current affairs and what's going on in Luxembourg. First of all, welcome to Luxembourg, to those of you that are not from here, and a big thank you to the organizers, IVIC and Vimco, for inviting us to speak here, inviting me to speak here. Tonight I would like to actually speak about my upcoming divorce with you all. Some insights into the discussions that I'm having at home, and what this divorce means for my future. I'm actually British, so of course I'm not talking about my real divorce, I'm talking about my emotional divorce with the United Kingdom and the European Union. My wife and I are doing fine. When I used to tell people that I'm British, I used to get a reaction of kind of awe and admiration for this romantic idea of a great United Kingdom. Nowadays I'm more met with a kind of that people are scared to even touch me as if I've got some kind of disease. And I don't know how much you're following Brexit right now or current affairs, but Theresa May recently joined the stage with her kind of theme song that was Dancing Queen by ABBA. If I were to have a song covering this speech, it would probably be something like You Can't Always Get What You Want by the Rolling Stones. It's been exactly 851 days since the referendum, and we've only got 157 days left before the UK should leave the European Union. It's been a long period of sound bites, Boris Johnson's fuck business, or that the European Union can go whistle, or even that the European Union reminds Jeremy Hunt of the USSR. I recently was in the US, and their Brexit is kind of seen as a reprieve from their daily US politics. When I speak to Europeans, they look at me confused about what is going on in Britain. And the Brits are either all singing Rule Britannia, or something more like me, which is something more like Highway to Hell. As someone who's basically working in Brexit right now, it's an emotional roller coaster, and if you choose to get on it, it can really tire you out. So if I can give my advice to anyone is don't get involved too much. But I'd like to cover basically where we are in the Brexit negotiations, what is happening in the financial industry, and what it means for the future of the financial industry. I will try to be optimistic, but it's not always easy. So where are we right now in Brexit? Brexit has not been a single event that happened on the 26th of June 2016. It's been a long time coming. It's been a 45-year process of integration, but at the same time it's been a long story of mess-ups where the European Union was treated as a kind of a nice thing to blame and nice things to take credit for in the UK. Also, the ancient UK government did very little in actually explaining the benefits of the European Union during the referendum question, partly why the referendum was as it is. But I'm not going to go into the democratic nature of it or the fantasies by the Leave campaign. I'll discuss where we are now. Currently, all the discussions, as you may be following, are about this crazy train, as Ozzy Osbourne would say, of the withdrawal agreement. That is the Jews, the rights of the European citizen, and the Irish border. Those are the three main topics for the withdrawal agreement. Should an agreement be made, then there might be a transition period. But right now, that's not even for sure. We heard yesterday it was 90%, Theresa May says 95% that we will get a withdrawal agreement for the UK leaving the European Union. But the real sticking point here is the Irish border. I don't know how familiar you are with it, but the Irish border is a very complicated matter where the British don't want to split up the European. The British don't want to split up the United Kingdom. They don't want a border with Northern Ireland, but both Northern Ireland and the UK are committed to not having a border in the Good Friday Agreement. Yet they're both in the European single market and the customs union. Basically, now the UK wants to leave the EU, some kind of border must be there in order to protect the integrity of the European single market. That is why there's a deadlock. That's why no one can find a solution. So if that were to be the case, then we'll get a nice political declaration on the future relationship. But that would have to be worked out in this transition period. This transition period is currently, right now, scheduled to last 21 months until December 2020, but it might be extended, as we heard in the news the last week. And if anyone's counting, that's actually 4 years since the actual referendum. So what are the scenarios for a deal? The checkers option, Theresa May's checkers option, that is not a possibility for a deal. It's pretty much insane. You can't be in the customs union and set your own trade policy. So it's pretty much a no-go. She's drawn her own red lines way too far. The reality is, pretty much the only options are kind of a Norway-based model or a Norway then Canada-based model, as you might have heard in the news. That means single market access initially, and then followed by a free trade agreement. But even then, the real issue for the United Kingdom is that all of these arrangements, Norway, Canada, or anything else, are not covering services. These are for the trade of goods. The UK is a service-based economy. 80% of its GDP is service-based, and of that, around 10% is financial services, and there'll be nothing allowing the provision of financial services to the European Union. I think our Prime Minister, Xavier Bettel, explained it best in a very, very nice soundbite, even though I'm not a big fan of soundbites, but he said that the UK was in the European Union with a lot of opt-outs, and now they want to be out of the European Union with a lot of opt-ins. The best possible solution, in my opinion, would be that the UK joins the European Economic Area after leaving. However, this is not possible for the United Kingdom. This would be a political suicide because they'll be taking rules, paying membership fees to the European Union without having any political say in shaping future laws. It would be kind of like a Hotel California situation where you can check out but you can never leave. For Theresa May, that's not possible. So instead, she'll try to blame the European Union and then probably leave on a no deal, because that is, for her political party, what will happen. So the scenario is for a no deal. Checkers is not going to happen, I've explained that. The deal can be voted down in Westminster, or her relationship with the DUP, the Irish party, can break down, or the Labour could stick a couple of stones in her way as well. Theresa May could be even ousted as Prime Minister before anything happens, but whoever would replace her might be even scarier than her. And then there's the question of the second referendum. To me, that's hardly a realistic option. If there would be a second referendum, and everyone would say, okay, let's actually stay in the European Union, this is an itch that would never go away in the political sphere in the United Kingdom. This question will come up time and time again in 2 years' time, in 5 years' time, in 10 years' time. It will just go on forever. So most people would agree that, unfortunately, it is the way it is, but let's just get on with it, just to save time. All of this basically started as a Tory party dogfight. And I think Michael Bloomberg explained it very well, where he said that it was possibly the largest self-harm any country has ever done to itself. But it just doesn't stop in the UK. It keeps going on and on and on. Politics over there has turned into this self-consuming, almost like they're eating their own children, as some French revolutionists have said before. And what will happen with a no deal? There will be no trading of financial services, no more passporting as we know it. And passporting of financial services, I'm sure you all know, but that is something that we need to find solutions for. And that's what's happening in the financial industry right now. I work for Luxembourg for Finance. We're the agency that helps develop the financial center. So we also represent the financial center. We are kind of a public-private government body by the Ministry of Finance. And right now, our main work is helping businesses find their solutions in Brexit. On the 29th of March, 2019 at 11 o'clock, UK businesses won't be able to do any business with the European Union that is regulated. So businesses are trying to find solutions, but even if there's a transition period, which is not a guarantee, businesses need a guarantee. So what we're seeing is that right now businesses are doing their contingency planning, and looking at relocating or moving certain activities to the European Union. You've probably seen this now on the news with different financial centers, including Luxembourg, competing, rolling out the red carpets, and saying that that's definitely the best place to come to Frankfurt or to Paris. One particular slogan I liked that was used by Paris recently was a slogan. They said, "When was the last time you invited your wife for a romantic weekend in Frankfurt?" I've personally been singing the same story for Luxembourg as well. But what we actually see is that the businesses that are moving, from the biggest banks to the asset managers to the fintechs, anyone that's regulated, it essentially comes down to two questions. What is our current operational structure? Where do we have businesses? Where is our network? And where does it make sense to move? Where is the ecosystem that works for us? So for investment banking, mostly they have a look at Frankfurt. For clearing, they'll probably move to Paris. What about for Luxembourg? Right now, on our internal Brexit tracker, we have over 50 confirmed relocations for Luxembourg. That is 22 asset managers, and that is either an increase in substance that they have already in Luxembourg. For example, Carlyle, one of the big private equity companies, they were already in Luxembourg, but not yet fully regulated. So they are increasing substance to continue doing business with their clients. Same with Aviva or EQT or Blackstone or M&G that are transferring funds that were in the UK to Luxembourgish companies. That makes sense. Luxembourg is a leader in the investment fund industry, so that's kind of a given. Asset managers will move to Luxembourg. What we've also seen is in the banking world, I think we've had 12 international banks that are restructuring their business to having a licensed headquarter here in Luxembourg. And one of the best examples there of what's happening in the industry is JP Morgan. JP Morgan has declared that they're going to move their activities to 3 cities. Some fund services to Ireland, some trading activities to Frankfurt, and wealth management to Luxembourg. And that makes sense. They looked at what they have and what ecosystem makes sense for them to move to. But the long-term effects on Brexit is best explained by Bank of Singapore. Bank of Singapore was looking to get into the European market, I think, in 2016. They were ready to move to London, but then Brexit happened. And they said, hold on, what are we going to do now? They had a look, what's the best place to access the European capital markets, and they chose Luxembourg. And that is where London is damaging itself. London's not going to lose its financial crown. They are the #1 financial center. But in the long term, when people are trying to access Europe, London will no longer be the default option. In fact, it won't be an option at all. In the insurance industry, we've also raised quite a number of eyebrows, where we've now have 10 global insurance companies that are now moving to Luxembourg as well, such as AIG or Liberty Mutual. That can easily be explained by the fact that we have actually a separate insurance regulator who's proactive and able to meet companies, and also with all of the soft factors in Luxembourg, for example, that you can do business in English. It's not something we actively market, because in Luxembourg it's so normal to do business in English that we forget to market it. And the same can be said now in FinTech. In FinTech, Brexit relocations are happening in the regulated space. Those are usually payment companies or e-money or electronic money institutions. We've recently had a couple of announcements by Alipay and by Revolut that they have chosen Luxembourg for their post-Brexit European plans. All of this is kind of reinforcing Luxembourg as a strong financial center. We're often ranked as number 2 or number 3 in Europe, always behind London, sometimes behind Frankfurt. But it's providing a short-term effect, a positive effect for Luxembourg. But I say short-term effect because it's definitely a lose-lose situation. Brexit, it means that in financial services, the European Union is losing the #1 financial center in the world. In all of those rankings, London is the #1 financial center. We're losing them. We're losing a like-minded ally in shaping financial regulation. Luxembourg and the UK were always very similar in terms of being more laissez-faire in shaping European regulation in finance, being more internationally focused. The Germans or the French, traditionally when they were looking at financial regulations, they were always looking at protecting their domestic market. The UK is open, was open, and Luxembourg is always open. So we are losing that. Furthermore, the UK has been, Yes, the UK has been Luxembourg's biggest trading partner in finance. 27% of all asset management is delegated back to London. And that is something that we're helping businesses find solutions for. So what does this mean for the future of financial services? It's clearly going to mean that there's, at least in the EU, a multipolarization of financial centers. London will lose its gravitas slowly. Frankfurt, Luxembourg, Paris, Dublin, they will all gain bit by bit. But as I said before, no one's going to steal London's crown. And one thing I want to clarify as well is when you see these Brexit relocation figures in the news, when you see 3,000 people move to Paris or 10,000 to Frankfurt, that's rubbish. Again, JP Morgan, they've announced that I think that 200 people will be moving to Luxembourg. That's not true. They're moving the top 2-3 people, and the rest are recruited locally. And the same can be said for all of the others. So it's a slow decline in some activities in London and a slow uptake in locally recruited people. What effect is that having on Luxembourg? That means that wages are increasing, demand is increasing for compliance officers, for risk officers, for the people that are needed for substance requirements in Luxembourg. But business will survive Brexit. Some plans are already finished. Some companies are already completely finished with their Brexit contingency planning. And what it also will mean for financial services is an increase in competition, specifically in financial services and financial centers as well. Another interesting aspect is now all of a sudden, every other financial center is looking to become more international in Europe. It used to be us and London, but now Paris and now Frankfurt and now Amsterdam are saying we are the best place to do cross-border business, even though that's Luxembourg's traditional business. This might be very depressing, all of this, but I do believe that Brexit is a short-term thing. In the long term, Brexit will have happened, but there are other challenges that are more important for finance than Brexit. Brexit will be solved. In Europe, and in Luxembourg as well, as we're kind of a microcosm to the European Union, the real challenges in finance is the digitalization of financial services and the sustainability of financial services. And there I'm specifically talking about sustainable finance. So first, let's have a look what's happening in digitalization. Well, also there are not good news. The EU is lagging behind. The EU is lagging behind the US and specifically Asia. And Europe's markets in digital finance are completely fragmented. Of the top 50 FinTech startups, 26 are Chinese, 16 are American, and 0 are European. Regulation is lagging behind, and so is consumer behavior. That's also lagging behind. To put this in a musical perspective, and I've been trying to do that all my speech now, imagine Europe's FinTech more like a kind of a sad, slow Adele song, an acoustic version. In China, when you're talking FinTech, it's kind of like the Bohemian Rhapsody and dynamic and changing wild song with the popularity and uptake of the Beatles. In China, 94% of people make transactions using their mobile phone. 94%. In Europe, I think I looked it up the other day, it was 21%. So what is Europe doing about? What is Europe doing? We're doing the very European way. We've got a European Commission action plan to create scale and to offer sound regulation. And every country is kind of doing its own thing. In Luxembourg, we're actually quite fortunate to be in a small country. And what we've done here is actually us, Luxembourg for Finance, we created the Luxembourg House of FinTech 2 years ago. That was in order to federate and to make a community for FinTech, to help develop solutions and to help the existing ecosystem digitalize. So that's all types of research projects on blockchain for the transfer agency model in Luxembourg, or for how to regulate crypto exchanges, as there Luxembourg again was one of the first movers. The second real challenge for financial service is sustainability and impact. Without a functioning planet, nothing else matters, as Metallica would say, even Brexit. And I recently read that the highest impact you can have in affecting climate change is not by going vegan or not taking your car or not flying. It's actually by allocating your resources into financial products that have a positive impact on the climate. that is sustainable finance. So finance that takes into consideration aspects that are not just financial returns. I think I'm preaching to the choir here. You guys know finance better than me. Here again, Europe is doing things, but actually we're the opposite. We're not lagging behind like we are in FinTech. Here, Europe is leading, and within Europe, Luxembourg is leading. The European Commission, again, has a Sustainable Finance Action Plan, which we're implementing, and Luxembourg is actually in charge of creating a taxonomy for sustainable finance. This sounds rather boring, but it's actually perhaps one of the most important projects. It's so that we're all speaking the same language when talking about sustainable finance. Thanks to the work of agencies such as LuxFlag, which is a finance labeling agency, Luxembourg is taking the lead in this role. Furthermore, as some of you might not know, Luxembourg is the leading green bond exchange in the world. Actually, we listed the first green bond in 2017, and now 2 years ago we created the Luxembourg Green Stock Exchange, an exchange dedicated to listing green securities. We've also got a number of climate finance accelerators, and we're also quite obviously the leading domicile for responsible investment funds. So that's all sounds good, but we need to do more. In order to reach the Paris COP21 climate change goals of keeping global warming below 1.2 degrees, sorry, or 2%, 2 degrees, we need to mobilize at least $100 billion US per year in capital. And governments can't do that alone. We need the private sector. And that's what we're trying to do in Europe, and that's what we are managing to do in Europe, is mobilizing this private sector. So that's a bit of optimism for you. So if I was a value investor, which I clearly am not, I would be investing in sustainable finance. To conclude, during the financial crisis, many Americans thought that the European Union would break up. Again, after Brexit, most people thought the European Union would break up. But to the contrary, Brexit has actually shown the resilience of the European project. With the single market, its integrity of, I think, 510 million relatively wealthy consumers, we are in a fortunate position. I really do believe, Bob Marley, that every little thing is going to be all right in the long term for Brexit. It's certainly not good news, but fundamentally it won't shake the EU's foundations. The UK will survive as well. Of course, it will have to build up an immense network of government agencies, which it has to basically repool its sovereignty and create governmental structures which will slow the UK down. That's their choice. That is how it is. But the European Union is already looking beyond this. We're looking at the completion of the Capital Markets Union, and in sustainable finance and in FinTech. That's what Europe is driving right now. Especially in things like sustainable finance, we're better off together. And that's why my speech is kind of anti-Theresa May and the whole thing that's going on over there. But I do believe that, like Jack Johnson sings, that everything is always better when we are together. And things like climate change, I mean, we can't fight it on our own. So we need to digitalize finance. Within Europe, we need to keep our relations with London for that. London and FinTech, that's kind of like the capital for the European Union. So we need to keep those relationships up in order to compete with countries such as China. And in finance, to have a positive impact, we need to work together, not apart. You may say I'm a dreamer, but hopefully I'm not the only one. Bon appétit.
Thank you very much, Robert. I think that's quite inspiring.